Most of my clients ask me, what's the best time to enroll into a final expense policy? So I would say if you're just turning 65, you are in this initial enrollment period called IEP, the 7-month window where you are like 3 months before your birth month date and birth month date plus 3 months. That's 7-month window where you're actually looking for Medicare supplement. That's actually the best window to sign yourself up for a final expense policy. Let me explain you why. Because in that 7-month window, if you're finding yourself very interested in selecting a Medicare supplement insurance policy, and you go with the national carriers like Humana, Aetna, or any top insurance carrier like Mutual of Omaha or Physicians Mutual. These are just 4 insurance companies. There are 20 best insurance companies, and you actually call one of our agents at Meta Senior Insurance, and we are going to help you find the best carrier who's trusted, highest rated, and we can work in any kind of budget. So let's say you're very interested in a Medicare supplement insurance policy. During that window of 7 months, you can actually opt in for a final expense policy with the same carrier. The reason we say that's the best time is because when they are enrolling, they means insurance carriers, insurance companies are enrolling a policy holder into a Medicare supplement insurance policy. During that initial enrollment period, they actually exclude any kind of pre-existing conditions, any health conditions, because you have to be taken, or from a carrier standpoint, you have to be enrolled. They cannot reject you because you have some kind of a health condition. Guess what? During that time frame, if you select a final expense policy, they're going to ask you very basic questions, or some carriers even say if a Medicare supplement policy holder enrolls, they can actually enroll into a final expense insurance policy with the same carrier with minor, very few questions or no questions at all. So think about it. This would be kind of a no questions, no health questions, guaranteed final expense. Now, that's the best window to get into from a final expense standpoint. Because think about it, relaxed underwriting guidelines. There's no medical checkup to be done. The policy amount, face amount of the policy is not huge. It's like minimum is $2,000 and max is $50,000. But you can get into the policy at the best rate possible. When I say best rate, there's certain types of rates. For example, it's a preferred rate or a super preferred rate. When I say you can get into super preferred rate during that 7-month window, that means it saves you a lot of money over the long run from a premium standpoint. Because if the same premium costs you around $100 when you have joined in independently, not in this initial enrollment period, the same policy would cost you around $70. So you're saving $30 a month for the whole year. Multiply that with 30 years. That's a huge amount, huge savings. In fact, I have seen clients who actually enrolled themselves into a final expense policy at the time of initial enrollment. So they have saved almost $300 to $500 a year. Multiply that with 20 years. So that itself is almost $10,000 that you're saving over the life of the policy. You're thinking about taking a $15,000 policy. In fact, with this savings, you can actually qualify for a $25,000 policy because you are actually selecting a nice policy during your initial enrollment, and that will save you money in the long run and also get you the super preferred rate, which you will not be able to get it after the initial enrollment period is over, because then you're going to fall into a normal rate or a preferred rate, which is slightly expensive than the super preferred rate. As soon as you select a Medicare supplement insurance, please think about a final expense policy, because once you add that on, you're going to get discount from the insurance carrier, either on the premium or you get qualified for a super preferred rate. So it's a no-brainer. A lot of my clients are very happy with that. And when they take both the policies, they get a lot of discounts and they're with the same carrier and they are really, really happy with the coverage.